Welcome to the Deep Dive. We're your shortcut to getting truly well-informed without drowning in data.
Yeah, we sift through it all for you.
Exactly. We take the sources, find the crucial bits, and walk you through what really matters. Today, we are doing a deep dive into the Austin residential lease market. And this isn't, just any market update.
Oh, it's been pretty wild.
Right. It's seen this really radical transformation, especially over the last decade, hitting levels right now in 2025 that are, unprecedented.
Completely unprecedented.
Our analysis is based on pretty extensive data from the Austin Area MLS. That's the multiple listing service agents use, covering a whole decade of active lease listings.
And we're also pulling from a recent expert piece looking specifically at this inventory growth.
Right. So the mission here is to pull out exactly what's driving these massive shifts and, crucially, what it means for you, whether you're maybe renting, own property, or just watching this dynamic city.
Let's jump straight to the current numbers because, honestly, they really tell the story, don't they?
They absolutely do. Okay, so June 2025. The Austin MLS shows, get this, 7,057 active lease listings.
7,057, yeah.
That number, 7,057. It's not just a statistic, right? It feels like a direct measure of maybe tenant power.
It really is. And to put that in context immediately, that's up 6.2% just from June 2024. That was 6,643 listings.
Okay, so a decent jump in 1 year.
A decent jump, but compare it to June 2023. Back then it was 5,176 listings. So we're talking a 36.3% increase in just 2 years.
36%.
Yeah. And what's really, really striking is the longer view. If you look back just 3 years to June 2022, we had only 2,478 listings.
Wow.
So active lease inventory has nearly tripled in 3 years, from just under 2,500 to over 7,000 today.
Tripled. That's staggering.
It is. And we've seen this consistent climb. I mean, every single month of 2025 has had higher lease inventory than the same month last year. It's just up, up, up.
It really is a dizzying climb, especially when you think about where things were. To really get this shift, we kind of need to rewind, right? Back when Austin's market felt completely different.
Oh, definitely. A different universe, like you said.
So what was the historical picture before this surge?
Well, if you look back, say, 2015 through 2019, the Austin lease market was remarkably stable, predictable almost.
Okay. Like what kind of numbers?
Active listings usually floated somewhere between 2,000 and 3,400, depending on the time of year, seasonal fluctuations.
Right. Normal ups and downs.
Exactly. Even in 2020, the start of the pandemic, inventory pretty much stayed in that historical range. Nothing too crazy yet.
But then came 2021.
2021. That's when things got really tight. That's when we saw the sharpest inventory decline. The absolute low point was May 2021.
How low did it go?
Believe it or not, only 1,620 active lease listings across the entire Austin area.
1,600, down from like 3,000.
Yeah, less than half the typical pre-pandemic levels. It was driven by, huge demand, lots of people moving to Austin then.
Right, the boom was in full swing.
Exactly. Population growth was nuts. So finding a lease back then, for renters, it was incredibly difficult, almost like winning the lottery.
So we've literally gone from finding a lease being like finding a unicorn to now they seem to be everywhere.
Pretty much, yeah.
What flipped the script so dramatically? What was the actual turning point that started this surge away from those really lean years?
The pivot point really kicked in during 2023. That's when Austin's overall real estate market started to cool down quite a bit from its, absolute peak frenzy.
Okay, the cool down begins.
And almost immediately, we saw this really rapid increase in lease listings. Take May, for example. May 2022, we saw about 2,147 listings.
Right, still pretty low.
Very low. Then, May 2023, it jumped to 4,664, nearly double in just 1 year.
Wow, okay.
And it didn't stop. May 2024 hit 6,070 listings. And this past May 2025, 6,323.
So just relentless growth.
Absolutely relentless. And what's interesting is you see this pattern pretty much every single month. It wasn't just a seasonal blip. This period, starting in 2023, it really marks the most substantial, sustained growth in lease inventory we've seen in, over a decade.
Which brings up the big question, right? What are the actual forces behind this? Why this unprecedented increase in rentals? It feels like it has to be more than just, simple supply and demand balancing out.
You're right. It's definitely more layered than that. It's this interplay of a few key factors. Probably the primary driver, and maybe the most interesting one, it's the sheer number of homeowners who tried to sell their properties, but couldn't.
The failed sales listing.
Exactly. Our data really points to this. It wasn't just rising mortgage rates, though that was part of it. It seems there was this unique to Austin situation where seller expectations stayed really high based on that peak boom pricing.
Stuck in 2021 mode.
Kind of, yeah. They held on to those peak prices maybe longer than the cooling market could actually support.
Yeah.
So compared to maybe other cities seeing rate hikes, a higher proportion of Austin listings seemed to just fail to sell.
Okay, so what did those owners do?
Well, faced with affordability issues hitting buyers and maybe not wanting to slash their price, many just decided, okay, let's lease it out instead, keep the asset, generate some income, and plan to try again selling later when maybe conditions look better.
The accidental landlord phenomenon.
Precisely. You can almost picture them, months on the market,
Mm-hmm.
finally just saying, fine, it's a rental now.
Yeah.
And that added a lot of supply.
Makes sense. What else?
Well, another big piece is new construction, but specifically things like build-to-rent communities.
So whole neighborhoods built just for renting.
Exactly. Not for individual sale.
Yep.
These, plus a lot of newly completed apartment buildings, multifamily developments.
Yeah.
They've added hundreds, probably thousands of new rental units,
Mm-hmm.
especially out in the suburbs around Austin.
Got it. So stranded sellers plus brand new rental supply.
And then there's the demand side. If we connect this to the bigger picture, tenant demand seems to have softened a bit too.
Why is that?
Probably a mix of things. Maybe slowing population growth compared to the peak years, and definitely ongoing affordability issues for renters too.
Mm-hmm.
So you combine all that increased supply from the accidental landlords and the new builds with slightly softer demand, and boom, record high inventory.
It really does sound like a perfect storm. Supply surging just as demand eases off a bit.
That's a good way to put it.
So given all that, what are the actual real world consequences? Who's benefiting from this inventory surge and who's having to maybe adapt their strategy?
Well, for renters, it's mostly good news, frankly.
More power to the renter.
Definitely. They have way more choice now than they've had in years. Just browsing listings, you see so many options. And crucially, that gives them more negotiating power.
So less competition means maybe better deals.
Potentially, yeah. Or at least less pressure. They're not in those bidding wars for rentals like they might have been in 2021. Finding a place is just less stressful.
Okay, good for renters. What about property owners? Landlords?
For them, the picture's more challenging.
Yeah.
This huge increase in inventory means a higher risk of their property sitting vacant for longer between tenants.
Empty property means no income.
Exactly.
Yeah.
And it can also put downward pressure on lease rates, or at least slow down rent growth. So to attract good tenants now, owners really need to, do their homework, analyze the market carefully, price competitively, maybe offer incentive.
They have to work harder to stand out.
They absolutely do.
Yeah.
So yeah, both tenants and landlords are definitely having to adapt to this much more competitive dynamic rental scene.
It really sounds like the Austin lease market has just fundamentally shifted from those extreme shortages just a few years back to now, record high inventory today. It's a complete 180.
It truly is a complete flip of the script, like you said.
So looking ahead.
Yeah, and if we try to connect this to the bigger picture, it seems likely this high inventory is going to stick around through 2025 at least.
Why do you say that?
Well, the affordability challenges for buying a home aren't going away quickly, right? Mortgage rates are still elevated. Prices are still high, even if they've softened. So buyer sentiment is likely to remain pretty cautious.
Which means more people renting for longer and maybe more owners keeping properties as rentals.
That seems probable, yes. And that raises some really interesting long-term questions, doesn't it?
Like what?
Well, think about the broader impacts. What does this shift mean for, say, Austin's property tax base if more homes are rentals instead of owner-occupied? Or what about the city's demographics if homeownership gets pushed further out of reach for a bigger chunk of the population?
Yeah, those are big questions.
And could this Austin situation be a sort of preview for other fast-growing cities that saw similar pandemic booms? It's definitely something to watch.
That really is a powerful thought to chew on. How will this fundamental shift keep shaping Austin, one of America's, most watched cities? And maybe more personally for you listening, how does understanding these kinds of market dynamics inform your own decisions or how you analyze things?
It's worth thinking about.
Absolutely. We definitely invite you to keep digging, keep asking those questions, and continue your own deep dives.